What's going on, everyone? Sal here, back again with another video. Ladies and gentlemen, today I want to talk about the trade that I posted on Twitter regarding Amazon. This is a very expensive stock, but what's great about spread trading is that you can play very expensive stocks in a very inexpensive way. And I teach people that in the simple trading method coming soon. With that, let's talk about it. And first, let's show you what the trade was. And the trade is an iron condor in Amazon, where we're going to be between 1850 and 1470. So I'm selling the 1850 call against the 1870 call, and then selling the 1470 put against the 1450 put. So giving my top side not so much room, but my downside a lot of room. Why? I don't expect too many downgrades on Amazon. In fact, if anything, I suspect you'll actually see some upgrades on Amazon in the near future, irregardless of the fact they came out today and said that this is going to be their weakest shopping. They expect this to be their weakest shopping season of the last several years. So, why traders are justifying higher prices, I don't know. And that's one of the things that I always will remember about this moment in time, 10 years, 20 years, 30 years from now, God willing, is how traders expected higher prices, irregardless of the fact that data saying, and the companies themselves would say that we've got a rough patch ahead of us. Let's look at price action in Amazon and kind of where my mindset is in regards to this issue. So when I look at Amazon and I look at the monthly chart and I put my favorite moving averages on there, what you see is that, price action seems to be slowing down. In fact, they are as close together as they were back in 2015. That means that velocity is decreasing. So the stock is actually losing strength. Buyers are a little bit more hesitant. You're seeing more, candlesticks that show a lack of conviction of buyers in these higher time frames. When you go down to the weekly, you in fact see that the crossover has already occurred in Amazon, and in fact now you're starting to have a harder time getting above that second cat or that middle Keltner channel here, as it continues to rely on the bottom Keltner channel here, showing you that lower prices are indeed in line for Amazon. Now we've crossed over here back in, when did it actually go below that? Back on July 29th, so already several months. So the trade that I just showed you has been a winning trade for the last 3 months in Amazon. So what I'm betting on is that the bad or deteriorating news will continue, or deteriorating demand will continue in Amazon. So I'm not, of course I probably could have gone higher, right? I could have gone to 19 or even 1910. Obviously I'd taken a little less credit. In fact, the trade that I showed you, because of the bounce, if you were to do that trade now, you'd actually take in a little bit more credit. But what I'm expecting again over the 30 days is that Amazon could very well bounce here at this support, but the idea of 1900, 2200 price target Amazon that I'm reading that analysts have just isn't there, and it's not justified by what was delivered today in earnings. In fact, if you look at Amazon earnings, it was a miss. For those of you guys who don't know, it was a miss on lowered guidance provided by the company last quarter. So they lowered the bar from them and they still missed. And this has happened now 2 times in a row. So the hesitation is very much justified when buyers look at Amazon, and I think they're going to continue to hesitate for at least, for at least the next month and a half or more. So we'll see what continues to happen in Amazon. We had a nice day on the market today, market wide. We ended the week green. Guys really want to hit those all-time highs. And let me tell you something right now. we went from a market that was $5 every other day green back in 2017 to now, if we're going to be going, $3, $4 every 10 days, I'm with it. I love it. I'm going to sell calls all month long if that's what we're going to be doing. $4 every 10 days. I love it. I love it. I love it. So again, that's something that I predicted in a video last week when I was selling that 3150 call. So love the way the market is trading right now. We're moving higher, albeit very, very slowly. That was very much predicted. But this Amazon play is going to be very interesting. Not going in it too heavy, just because this, again, is a very expensive stock, and I don't want to break the bank here. But I just want to prove that maybe something has changed fundamentally in Amazon, and people are now starting to question value. See, one thing about trading at a premium is that when you deliver earnings, you can't go wrong at anything. And in fact, if you think I'm wrong on that, go ask the people who bought GoPro. Go ask the people who bought Blue Apron. Go ask the people who just bought Netflix. Look and see what they're going through. When you're trading at a premium, you've got to beat, and you've got to clearly beat on every single line on that earnings report. And unfortunately, that's not what's occurring right now in Amazon. I don't have any doubt that they'll make billions of dollars. Black Friday, yes, is around the corner, but at the end of the day, great earnings justify higher prices and higher valuations. That's not what we got in Amazon. So I'm hoping that my trade ends up being a winner. It's your boy Sal. Until next time, trade well. Take care.